It seems impossible. But for millions of Americans, this might come true in 2024 as inflation continues to affect everyday spending. Imagine waking up to find an extra $5,000 in your bank account, a lifeline to relieve financial stress and provide some much-needed respite. In this video, we'll go into great detail about the upcoming changes and what they mean for you. The Social Security Administration has announced significant updates that could result in larger checks for beneficiaries of Social Security benefits next year. Are you eligible? When will you receive your payment again? Stay tuned. First, let's talk about eligibility because you don't want to lose out on this important information that could increase your financial security in the upcoming year. To be eligible for the highest Social Security benefit of approximately $55,000 in 2024, you must fulfill a number of requirements. Firstly, you must have worked for a minimum of 35 years, during which the year's earnings must have reached the maximum taxable earnings level. Additionally, delaying retirement until age 70 can greatly boost your benefits by optimizing the monthly amount you receive. So what precisely is changing as a result of changes to taxes and inflation? The Social Administration of Security. The Social Security Administration, SSA, released a 3.2% cost of living adjustment, COLA, for 2024. Although this is a smaller rise than the adjustments from the previous year, it is still a significant boost for beneficiaries. This implies that the average monthly Social Security retirement income will be approximately $1,855, but those at payments near $5,000 at the upper end of the spectrum. But what about the $5,000 checks? In particular, the SSA will begin making these payments on February 21, 2024. Nevertheless, there are strict requirements to qualify for these higher amounts. If you have only worked the taxable limit for 34 years, you won't be eligible for the entire sum, and the maximum payout would only be given to individuals who have postponed receiving benefits until after they turn 70. Knowing when you'll get paid is also crucial. If your birthday comes between the 1st and the 10th of the month, your check will show up on the second Wednesday. As we look more into the details of the 2024 Social Security adjustments, it becomes increasingly important to comprehend not merely the eligibility conditions. The third Wednesday of each month is for individuals born 11/20, and the fourth Wednesday is for those born after 21. Not to mention the larger economic environment affecting these choices. Although small in comparison to other years, the 3.2% COLA increase illustrates a cautious balance between preserving the Social Security system's financial sustainability and providing enough support. This adjustment is intended to keep up with inflation, guaranteeing that beneficiaries' purchasing power is somewhat maintained in order to completely understand how these changes impact you. Let's start by dissecting the essential components. The Consumer Price Index for Urban Wage Earners and Clerical Workers, CPIW, which tracks price fluctuations, is the basis for calculating the COLA. As a collection of products and services, this index is important because it has a direct impact on the yearly adjustments to Social Security benefits. The average CPIW for the third quarter of 2023 compared to the same period in 2022 is the basis for the 3.2% COLA for 2024. This little increase in monthly income is a lifesaver for many retirees, as it helps offset the rising costs of necessities like housing, food, and healthcare. However, the rise still falls short of the actual inflation rate that many seniors confront. Advocacy organizations like the Senior Citizens League have long maintained that the current COLA formula does not accurately reflect the spending patterns of older Americans. They continue to push for reforms that would ensure Social Security benefits keep up with the disproportionately higher costs of healthcare and prescription drugs. Retirees' actual rate of inflation. Furthermore, it is imperative to comprehend that the increase in Social Security benefits will not be uniform for all recipients. Rather, the impact on each beneficiary's income would differ significantly based on their prior earnings and the length of time they have contributed to the system. For example, a person with a lower lifetime earnings record or fewer years of employment will receive a smaller benefit than a person with a higher lifetime earnings record. This discrepancy is important to take into account when making plans. In addition, the Social Security Administration has made it clear that people who meet certain requirements can get the maximum benefit amount of $4,875 upon retirement. Them include achieving retirement age at 70 years old and working at occupations that qualify for Social Security for at least 35 years. Deferring retirement past the conventional age guarantees the maximum payout in addition to increasing your monthly benefit. The reasoning behind this is simple. The more time you spend delaying your claim, the more delayed retirement credits you accrue, which can greatly increase your monthly payout in the future. Verify the ramifications of these changes for Social Security payouts in terms of taxes is another aspect. The fact that federal income tax is levied on Social Security income, especially if an individual's total income above specific limits, and accounts for up to 50% of benefits, surprises a lot of beneficiaries. May be taxable if their total income surpasses $25,000 for married couples filing jointly. For single individuals, this barrier is $32,000 over these limits. This includes adjusted gross income plus non-taxable interest and half of Social Security benefits. These regulations, which might tax up to 85% of Social Security benefits, are essential because budgeting is important since it can have a big impact on your take-home pay. The Social Security Administration will give you a Form SSA 199 at the conclusion of the year if you are currently receiving payments. Additionally, the IRS has revised its instructions to ensure that Social Security recipients are aware of these tax implications. The year that shows how much you were paid in Social Security benefits and how much was deducted in taxes. It's crucial to thoroughly go over this form and speak with a tax expert if you have any doubts about your tax liability. This is especially crucial because the IRS keeps making adjustments. Its standard deduction levels and tax brackets, which may have an effect on the total tax burden on Social Security benefits. Apart from these modifications, it's important to remember that the Social Security Administration is also trying to enhance its outreach and service offerings. The SSA has started a number of programs with the goal of improving the user experience by adding online resources for benefit verification, updating personal data, and submitting new benefit applications. The SSA created these technological innovations in order to expedite procedures and shorten beneficiary wait times. Empowering people to handle their Social Security matters from the comfort of their houses as a result of the emphasis on preventing fraud and identity theft. With the increase in cybercrime, safeguarding personal information has taken precedence. Beneficiaries are encouraged by the SSA to use safe online services. Routinely check their Social Security statement and report any questionable activities right away. Method is required to guarantee the integrity of the Social Security system and provide payments to the eligible recipients as we proceed. It's also critical to take the larger economic environment into account. The issue of Social Security's long-term viability remains a contentious one among economists and policymakers, as well as advocacy organizations. Without legislative intervention, the aging population and the declining workforce pose serious threats to the system's viability. According to predictions, the Social Security Trust Fund, which is used to pay payments, will run out by 2034. After that, the program will only be able to pay out 80% of the benefits that are scheduled. Aiming for comprehensive reforms, ranging from raising payroll taxes to changing the retirement age, the impending crisis has sparked cries. Thank you for watching, and if this video was helpful, please give it a thumbs up and subscribe to our channel for more updates on financial matters and Social Security. Planning advice. If you have any queries or need more clarification, please leave a comment below. Until then, be educated and take care of your financial future.